So we're just missing Sebastian and Arturo. Okay, perfect, guys. First of all, basics, rule basics, guys. That's something that I got very clear the last semester. Rule of thumb from now and forever on my class. We are gonna do the online thing. I need to see your faces. Please turn on your cameras. Don't make me see a black screen. Let's start, guys. Today's goals are to understand what is, hello, Andrea Bustillo. Very good, very good.
Yes, sir.
Welcome, welcome. We are just starting, so you go to the good part. So today's goals are to understand what is international operations accounting, basic concepts, visualize what is the value of international financial management and how are we going to use it in our professional lives, obviously. Review the course content, and rather than the student profile, we are going to do an exercise related to the foreign risk, currency exchange risk. So what is international operations accounting? Let's begin with definitions as usual. Ooh, let me make myself more small. Nice. What is international accounting? It includes the study of various functional areas of accounting. It focuses on the accounting issues unique to multinational corporations, international transactions, and foreign investments. That's very important. That's very important. We will see transactions as acquisitions, mergers. Okay, mergers and acquisitions, M&A. Always that you always hear that it's M&A. That's a super good strategy to grow the M&A. There are enterprises only dedicated to do that process and to grow on that way, because you can buy companies that already passed the valley of debt. The valley of debt. Remember the valley of debt? Valley of debt from startups. If you pass that, you become profitable. And what if I buy that profitable company? I can add it up to my balance sheet and to my profit and loss. And automatically, in a matter of months and finishing the due diligence, I grew up a lot, my balance sheet and my P&L. Also, we need to understand that we can see international operations from 3 levels. Let's go with the general level. It's the study of standards, guidelines, and rules of accounting, auditing, and taxation within across countries. Comparative analysis, that's something that we will see along the way. A good example is, what is the treatment of property, plant, and equipment in Mexico? What is the treatment in the United States? What is the treatment in Europe? The same with the inventory. What is the treatment in Mexico, United States, and Europe? The second level comes to the supranational accounting. What is supranational, guys? Who can answer me that? This one, supranational. Don't Google it. Supranationals corporations are corporations intended to have legal authorities over multiple countries, like the UN. It's a supranational corporation. Okay. The standards, those supranational accountings comes to the standards, guidelines, and rules issued by the supranational organizations, as I told you. The ESB, remember who is the ESB? Gotcha. What is IFRS?
IFRS?
Yes.
That's basically everything we saw last semester.
Exactly. Those are what is IFRS?
The standards to report
National
accounting.
Financial Reporting Standards, right?
Awesome, Marcelo. But, okay, yeah, those are the guidelines. But who issues those guidelines? The ESB. Okay. Who issues, how do you call the USA guidelines?
US GAAP.
Awesome, US GAAP. And the Mexican guidelines?
NIF.
Or also known Mex GAAP. You can call them that way also. Who issues the US GAAP? That guy from the left, from my left, US FASB. Okay, remember, we will see them. We have to, the first topic you will see that it's a comparison between both, and why is it so difficult to manage this topic, because the intention of having these supranational organizations is to find a way to standardize the accounting system, so everybody reads it the same way and everybody can use it the same way. But you know that the US guys loves to make it difficult, and that's why they use a different metric system. So they have different rules. And we will watch this international operations accounting at a company level. Accounting specifically related to international business activities for you and foreign investments. Okay, we have, as guys, please tell me, what types of risk do you have in an investment? Tell me all the risks that comes to your head. What if I want to invest in a USA corporation and I'm based in Mexico? Tell me all the risks that you can assess.
Law.
Law, that's one. Awesome.
Inflation rates, just as today's
Inflation rates, awesome.
meeting. Well, today was this important meeting on inflation rates.
Exchange rates, right?
Yes.
What else is, guys?
That, for example, if you were to make an international operation, you get no enough money, like liquid money, to cooperate in other countries.
But I just invested in a company that doesn't involve liquidity issues. We're just watching what are the risks of my investments, because obviously by changing countries, my financial risks are different. Why? Why the risk should be different in a US investment or in a European investment or a China investment?
From culture, then there are political factors.
Political factors, political
Ukraine,
risk.
Russia war. You know, the last time we talked, I'm this came to my mind right now. Last time we talked, there was no war.
There was what?
There was no, let me get this closer. There was no war the last time we talked. Like the last class, now there is a war in progress.
So true, my man. That's so true. That could be a risk.
Yes.
So imagine all the things that you have to consider in order to understand this foreign investment thing. You already know how to kind of assess the risk, but you have to apply it in different cultures, different countries. So a good example of all that we are speaking right now is international transfer pricing. Who can explain to me international transfer pricing? And don't tell me we didn't saw that.
I don't know if it's what I remember because I remember the concept, but I don't know if that's how it was called. But I remember you mentioned something that you can like fix a price or an exchange rate for a transaction when you, I don't know how to explain it, but I don't know if that's the thing.
Come on, guys. Come on. Any help? Help Samantha. Who remembers what are transfer pricing, international transfer pricing? Give me an example. Marcelo, you're not in the gym, right?
No, teacher, I was walking home and just, yeah, getting comfortable at home because I was so sweaty from walking. But okay, I'll take a shot. International transfer pricing. I don't know, maybe establishing a fixed currency rate. So, for example, if you were gonna set an agreement to pay a part right now and a part later, but the currency can change from one day to another, but you agree on a specific rate, no?
No.
No,
Let's
cool.
let's
Then.
let's let's draw a little map. Like, what am I drawing to see if my drawing skills are good?
Mexico.
So,
A
guys,
nice dream.
what is Tesla based? In here, no? Where? I think they are moving to Houston, no? But they were from San Francisco. That's why they established, no? I think they moved to Silicon Valley. So what if they decide to put a manufacturing company in here? How much a Tesla cost? Who can tell me?
Depends.
Sale
if you're
price.
sale
Sale.
price. Like 2 million pesos, 3 million pesos.
So that's $100, no? $100,000. That's
Yes.
true? Okay, perfect. How much do you think it costs? Let's leave it in 50K, okay? Remember what it means, 50K?
50K, that's a million pesos.
Thousands, okay? Thousands. So it means they earn 50% on gross margin, okay? What if I decide to open in here one company because I see that the costs, I can drop it down up to 40K per car, okay? But because I'm very smart and I'm Elon Musk, I decide to buy it for 30K to my subsidiary because I own it. I tell my subsidiary, sell it to me for 30K. if this is the cost for the Mexican company, okay? But you are selling to Elon Musk at 30K because it's my own company and I'm Elon Musk. What would be the gross margin for this transaction? $10K, right? $10K loss. Does it make sense to you to do this? Because in the US, where I live, I will be now earning, instead of 40, it's 30. In the US, I will be earning and I'm in the stock exchange of New York, and obviously the profitability benefits me a lot. Does it make sense to you to move to Mexico and change this to this? From 50K that I was winning per car, now I will win 70K.
But what about the 10K loss?
This 10K loss,
Yeah.
at the end, I was winning 50K at the beginning. But that's a good question. I don't care to lose in Mexico because I don't have any benefits from Mexico. I don't have financing rounds in there. I don't have stock exchange markets in there. And how much I will have to pay to the IRS from Mexico, to the SAT. If you have losses, how much do you pay to the SAT?
31%.
31%. No, my friend. If you have losses,
Mexico out of if you have losses, I mean nothing. You're not having money in.
and by law, guys, understand this, by law, if you have losses, you can amortize them the next year. So if you have a loss in this year and the next one you have profits, rather than paying, you can use that loss in order to avoid paying those years' taxes, okay? So,
Prof,
yes.
is there a way to have a portion of the amount of money you pay to the SAT here, like as a return? That money can recover it in a way.
Can refresh the question, please? I did not understand.
May I have my money back from the SAT? Like,
Oh,
no.
yes.
Oh, not
If you overpay, you can always request a reimbursement from the IRS or the SAT, from both, huh? And there are a lot of ways to overpay them. Like, for example, a very common way to overpay them is if you are rather than a salary, let me tell this terminology in Spanish. Si son asalariados, la empresa, el patrón retiene los impuestos. ¿Ok? Pero si ustedes deducen ese impuesto, esa deducción, porque hay deducciones autorizadas para asalariados, las hipotecas de las casas, las escuelas de los hijos, los doctores, casi hasta la gas la puedes deducir.
Hola.
Pero de todas maneras ya te retuvieron y ya pagaron. ¿Cuándo recibes ese beneficio o esos impuestos que debiste haber dejado de pagar porque tuviste deducciones autorizadas? Hasta el anual. Pero tú ya sobrepagaste. Entonces tienes que pedir una devolución. Okay? But
Okay.
not the purpose of this explanation. Let's get back to it. We were, Andrea, question the question is make the question that I wanted to be questioned. What is happening in here? They are leaving all the earnings in the US and how much I will pay in Mexico from taxes. Nothing, and I even have a beneficio, beneficio, sorry. I have, actually, this is an asset for you because this is something that you can use to pay taxes. Well, the governments are not stupid. They obviously realize this type of operations. That's why they use the transfer pricing. The transfer pricing consists on, rather than selling at the costs, or below the cost, they use the market value. So the government tells you, I don't care, it costs to you 40K. In the market value in Mexico, your Tesla is worth 50K, 60K, sorry. So you only can sell it for 60K. Or let's leave it like 45K because it wouldn't make sense to go to Mexico to be expensive here. But take a look. It cost to me 40K. Now I'm selling it for 45K. And we have, rather than a loss, I have a 5K income in Mexico. And I still have, from US perspective, I'm still have a benefit. Okay? Rather than paying 50 in the US based operation, I earn 5K, extra 5K per vehicle. So transfer pricing tells you that you have to pay in foreign transactions to market value. How do you think they do that? How would you determine the market value? Any clues, guys? How would you determine the market value of things? You have to do a study, a full study, make a normal distribution of prices, assess some parameters from the minimum price to the maximum price, and you will have a range called market value. Do you have to do it? No, you have to understand it only. Because if you have this type of transactions, you are obligated by law to do this study. Okay? That's the importance of watching transfer pricing. So let's go back to our presentation. We were watching transfer pricing, the levels. No. Okay, levels. Transfer pricing, yes is yes. That's something at a company level. Tax rule is specific to corporations, obviously different tax rules, different countries. Foreign currency transactions, which are the things that we will do right now. Techniques for evaluating foreign operations. It's very common and very usual that you will have foreign currency transactions. I just explained it at the beginning, like in a hotel. So, our first encounter with international business occurs as sales or purchase to from foreign customer suppliers. Credit sales are made to foreign customers who will pay in their own currency. Gives rise to foreign exchange risk. So let's do our first case. Suppose that on February 1st, it's 2022, sorry, I changed it. Arturo, INC company, makes a sale and ships goods to, I changed it to Andrea for customer for $100. This is the correct one. Suppose that on February 1st, 2022, Arturo INC company makes, which is based in Mexico, makes a sale and ships goods to Andrea. So guys, take a picture of it because I will have to go to the whiteboard and you won't see it. So Arturo make a sale to Andrea. Arturo is based in Mexico. And he made a sale to Andrea, which is in US. So first of all, forget the currency. The first question in here is, Arturo, tell me in which currency would you prefer to be paid?
Dollars.
Why dollars?
It's a more valuable currency.
But the peso is appreciating right now. No? No?
Oh, well, if it's appreciating, then for sure, of course.
And Andrea, in which currency would you prefer? Let's go with Andrea Bustillo. In which currency would you prefer to pay? If you are based in US.
In dollars?
I agree with you. Arturo has a reasonable thesis. I would challenge your thesis because you will have exchange risk exposure. And rather than accepting that exposure, you can mitigate that exposure by transferring that risk to Andrea. We will see it right now. So, however, it is agreed that Andrea will pay in MXN, in pesos, on March. Let's forget about it. Let's do the maths. Did you already copy it? Let's share. Awesome, guys. So please tell me what is the, from Arturo perspective. And we will have in here Andrea perspective. This is our first encounter with foreign exchange exposure. So please, who can help me? How do you register a sale? Debits and credits.
Bank account.
It's a credit sale, right?
Ah. Account receivables.
Aha. Account receivable. Let's do it for $100. Okay. That's the transaction. But Arturo has to tell me, how would you invoice her? Because remember that we must have a legal support for every transaction in the accounting system. So the sales are supported by an invoice. How much would you invoice, Arturo? Would you invoice $100 or 2,000 pesos?
Based on whatever she wants to get paid on.
I totally agree. That's the first check. Awesome. But check this out. Check this out, because this is where it gets tricky. Although you invoiced in dollars, by Mexican regulation, you have to put what is the exchange risk, the exchange rate of that foreign currency transaction. What is the legal for currency rate? What does the SAT tells us? What is the rate to use? The one from the previous day of the transaction submitted by the Bank of Mexico. Okay? So you have $100, but you have let's see it. Let's see it. Let me see it. I have it in here. We can see it. Mexico. Let's use this one, okay?
Did you what did you say the previous
It's the
one?
previous day. That's the fiscal regulation. That's what it tells you. But at the end, potato right now. Okay.
Okay.
Exchange rate. So our friend Arturo registered $100. Let's put it a little bit cleaner so I can automatize it. That's it. Times the exchange risk. That's what he registered. In the accounting system, guys, this is how we actually do it. Oops.
So technically, is that dollars or pesos?
Technically, in your accounting system, you have pesos, and you are obligated to have pesos as your currency, official currency. Why? Because it's the fiscal currency, the tax currency. The important part of that is that you can't change your official currency, although you can submit an application to change it to the SAT, but I haven't seen that thing in my life. Because at the end, all the tax calculations are made in pesos and you pay to the SAT in pesos. Okay, that's the main reason. So in here we have an account receivable. What did Andrea register? Tell me, guys, what did Andrea register? Anybody? Are you there?
Teacher, that's still not the payment, right?
That's still not the payment. This is just the sales process. What did Andrea registered?
Inventory and bank
Awesome.
accounts?
Yes. No, not bank account because you haven't paid. But it is
Okay.
inventory.
Inventory.
I don't know if it's an expense, but the most common
Accounts
thing is
payable? No.
accounts payable.
No.
That's it. It's a debt to Arturo of how much? Tell me the amount.
Her system is in dollars?
Her
Or-
invoice is in dollars.
And 100?
That's it. And let's do this transaction was made March 16 date. Okay. March 16. But now, guys, here comes the funny part. You give her 30 days of credit, Arturo. Okay. So she will pay you April 16. So here it comes the next transaction. Why do I have a transaction on March 31st? Who can explain it to me? Why do I have a transaction on March 31st? That's the fun part. We usually, guys, report the accounting operations, all the statements. We usually report them on a monthly basis. You don't have to go public and publish the quarterly figures. That will depend totally on your investors. But to your board of directors, you have 100% sure you will have to report on a monthly basis. So if you want to report on a monthly basis, you will have to figure out how much these $100 that Andrea owes you, Arturo, are worth. If you have to report on March 31st, so what would happen if the price or the exchange risk goes up? What would happen?
Since it was already an agreed fee, it should stay the same as
An agreed fee.
agreed, no?
No. She owes you $100 and that's it. You told me, right?
Yeah, true.
So now those $100 are worth more. Good for you. Good for you for choosing because you won 30 pesos in this transaction. How it goes to that? If you multiply the 100 times this, you earned 30 pesos. Do you agree? Oh, let me make it bigger. Until here, we're good, guys. Tell me the accounts. Tell me the accounts. I don't know how, but Arturo managed to win 30 pesos. First of bank account. Is this money entering my bank account?
Yes.
No, you still have an account receivable. So your account receivable increased in value. Okay, guys? Now you match the value, the market value of the first transaction. Right now it's worth 2,100, okay? And in your profit and loss, you have something called foreign exchange gain and losses, okay? You have unrealized gain and losses of FX. Why it's unrealized? It's unrealized because you are not able to go to the bank and exchange those $100 to the bank and take it to the bank and convert them into pesos and win those 30 pesos that you have won. That's why it's unrealized gain in this case or losses. This is for reporting purposes. Example number 2 for reporting purposes. Does Andrea have to do anything? She doesn't have to do anything. Nothing. What happens in this case? Who can explain me the movement of the exchange risk from this one, from the initial one to the second, from the first example? What happened to the peso? To the Mexican peso?
It was,
Appreciated?
yeah.
Samantha says appreciated.
No, depreciated.
Why depreciated?
Because it says the dollar was went from 20 to 21.
Awesome. Awesome that you get that concept. Everybody's in the same line, guys? The peso got depreciated in this case. But what happened if it gets appreciated? What would happen to Mr. Arturo? Tell me, guys. What will happen to Mr. Arturo? Because he chose to be paid in dollars. And this is a profit and loss, so it makes it goes as an expense. Do you see the importance, guys, right now? This is unrealized gain. And even if it's unrealized, you're reporting to your investors that you are losing or winning. In this case, You are losing los calzones. How do you say that? It's a horrible loss because he chose to be paid in $100. What is the register for Andrea? Nothing again. Okay, guys, let's move to the payment. Let's move to the payment. Example 2, this is payment. Sorry, no, this is not example 2. This is example 2, example 3, example 4. The same thing, guys. We get to the payment. It's April 16, right? April 16. April 16. Now this is the foreign exchange rate. Tell me what is the register for Arturo when he gets the payment.
Bank account.
Bank account, awesome. How much you will charge to the
Account
bank account?
receivable.
And cancel your account receivable. How much?
For will she pay in payments or directly the $100?
Directly the $100.
Okay.
Don't make it more difficult.
Well, $100. I don't know.
To the bank account?
In pesos, right?
I don't know. It would depend if you can receive dollars. What would happen if you can receive dollars is that you have a dollar-based account, and when you get to the end of the month, you have to revalue that USD bank account to make it go to the market value. In this case, we will leave it in pesos. You receive $1,000 and the exchange rate in the bank, the exchange rate that the bank gave you, it's $22, 22 pesos per dollar. So in this case, you received $2,200. Awesome. How much do you have in your account receivable in this case? Let's make it 1.2 so we don't lose it. Let's relate this one to this one. So guys, you have to cancel this account, right? You had in the account receivable balance the initial sale and your revaluation for reporting purposes. But what is happening here?
Because of the change of the peso, since it was like days, different
We are
days.
missing exactly. So we are missing an accounting here. Remember that when we did a revaluation, we did unrealized gains, but let me tell you that this is more than realized. So tell me the account name. This is realized gains and losses. How much? And remember, the credit in the P&L are good or bad? Credits in the P&L are good or bad?
Good.
Those are more sales, more income, right? You made it, my friend Arturo. Nice choice right now. You won 100 pesos, more than you expected in the first transaction. But let's watch the second one. What would happen in case of the example 2.1, no, 2.2? You collected $100 at a rate of 18 pesos because the bank are very greedy and they decided that they will give you that exchange rate. And believe me, that's very common. Actually, this almost doesn't happen. Like the bank rates are like, they don't lose. So what happened to your account receivable? You had an account receivable of, I'm relating it to the second example. You had an account receivable of so what is happening? These are gain or losses. This is a gain or a loss.
A loss.
And what was the transaction for Andrea? What was the transaction when she paid? Bank account, credit, 100, and accounts payable.
Accounts payable.
That's it. This is the first example of foreign exchange rate risk. So before deciding, yes, Arturo, it sounds very good to be paid in US dollars, but take a look of all the work that represented for you. I will show you Arturo accepting the risk. Something that it's called, well, we will leave it for later, but I will show you how you can create your synthetic hedge. How you can hedge these transactions. What does hedge means? Anybody? Remember the
Correct.
derivatives? Yes. You can create synthetic hedge with these type of operations by transferring the risk to the other party. That's called synthetic derivative. You will see it right now afterwards, but you get my point, guys. This is the first transaction, all the work that you have to do, and in order to understand that if you will have foreign transactions, you will have unrealized gains, realized gains, exchange rate risk. So let's take 10 minutes, guys, to finish. Let's go to the bathroom. Take 10 minutes. We see each other at 7:30 to finish and wrap up. I have to finish the presentation, but let's go on a break, okay? See you in 15. I don't know, it went off. Well, we were watching the derivative markets. I just wanted to show it to you so you don't think that I'm crazy. I'm just speaking nonsense. This is the MEXDER from Mexico. This is the Chicago Mercantile Exchange. Can you operate derivatives? The answer is, who can tell me the answer?
Yes, of course.
No.
Deri-
No.
Yes, derivados. Yes, you can like trade with the price of, let's say, whatever thing you want is going up or down.
Okay, my question was incorrect. I get you. Yes, you can. There are platforms that allow you. Be careful with those. But I was speaking regarding these markets. You have to be licensed, okay?
Okay, I understand.
In these markets, because it's a little bit harder, but I can explain you one good example that when the derivatives have a market value also, like the stocks. So before you get to the end of the contract, you have to reverse the position in order to cancel the operation and to subtract. If you have benefits, you subtract them, or if you have losses, you realize them. But somebody didn't close the position correctly, and at the end they received like a ton of pics in their office because they didn't close properly the contract of the derivative. So that's why you have to be licensed in order to operate these derivatives, okay, in these markets. If you don't want to receive pics in your office. We were just missing the hedge fund and I don't want to explain them. The option, well, I will explain them, but the options grant you the right to sell the foreign currency at a predetermined exchange rate at a time. Right, the right to sell. That means that if you win, you exercise the contract. If you don't win, you don't exercise it. What is the amount that you pay? You pay a premium for that contract. And that's what you lose. You limit the losses to the premium. The forward contract is an obligation to exchange foreign currency at a future date. You can lose everything that you have in here. The losses can go to infinite and the wins can go to infinite, okay? We will explain them further. I just wanted to to tell you about it. So we were speaking about the currency exchange risk. This is a way to mitigate it. This is the course content, guys. International harmonization process of accounting. This is the syllabus. I didn't do that. Nobody asked me. There are good things, very hard things in there. International harmonization process, pure theory. That's the boring part. Inflation needs and trends for the expression of financial statements. It gets tricky, not that hard. It sounds worse than it sounds, but conversion of foreign currency, guys, I teach that to directors. I teach that at graduate level. That's hard. If you miss that, you won't understand. If you miss one class in that part, you're done. You won't get that part right. Okay, be careful with it. Take a look. We were just watching one example with a sale, a simple sale, and everybody got like, what? What? Question marks. Consolidation of financial statements, also a hard topic. We will do a capstone project as we usually manage a capstone project. This will be, I think it will be easier because there is no investigation process. It's just a matter of arrastrar el lápiz, but it involves conversion of foreign currency. I even have it open in here. I can show it very, very fast to you. International accounting, yes. Capstone project. I will show it to you at the final, but let's finish conversion of foreign currency, consolidation. Consolidation, remember what is consolidation, guys?
Yes, when you like put together the statements of various companies or subsidiaries.
Awesome. Transfer pricing, just a matter of explaining, as I just did, not too long. You don't have to be an expert in transfer pricing because at the end, you have to, you need to have the study that I just told you. Remember the study? You have to contract somebody to have that study, and that's it. But you have to acknowledge in which situation you have to get that study. Perfect. Very easy. International audit and corporate governance. Guys, this is la crème de la crème. This is a very good topic. This will help you in your companies to have good internal control, and you will identify risks. This is the way to identify risk and assess risk and put internal controls in your companies so you don't get frauds, so nobody can steal you, so nobody can fraud you. That's the way. Okay? Sarbanes-Oxley, do you remember where it comes from? It comes from a fraud, a public fraud, a company called Enron. You can Google it, Enron case, and you will find it. It's the biggest fraud in a company, in a stock exchange history. This is the course material, guys. This is the book, as usual. Please buy the book. Don't download piracy, hopefully. And I just wanted to show you very fast, just before we finish, the final project. We will do a reexpression, currency reexpression. It's just a translation from pesos to dollars because I can operate in Mexico, but I have USA investors. So you need to acknowledge how to translate those statements to the language of the investor and what implications in your profit or loss it will have. And how to consolidate. In here we have 3 companies, and I will show you how to consolidate those 3 companies in order to present just one statement. Which statement? A profit and loss and a balance sheet. Okay? Thank you, guys. That's it for today. Go back and take some rest because I will be in contact with you in order to see if we can see each other on next Wednesday, okay? Let me go with Michael and try to get a classroom, and let's see each other on next Wednesday, okay? I will confirm it. I will tell you via Brightspace, okay? Thank you very much, guys. Have an excellent night. See you soon.
Thank you, bro.
teacher.
Thank you,
Thank
teacher.
you, Fran.
See you.
Bye.
Nice,
Thank you,
nice to
bye.
see you.
Bye-bye.
Bye.